Hey, good morning, everyone. It is Thursday, March the 5th. It's Louisa from cold Canada. How is everybody today? It's 9:01. It is the day before non-farm payroll, so it's a low probability day for trading. So I'm here to tape read today. This is a tape reading channel. I don't give advice. I'm an ICT student. I'm not licensed to give financial advice. This is for entertainment purposes only. I'm going to wait a couple minutes for some more people to join, and then I'm going to do a review of what happened overnight in Asia, London, uh, and just review the chart for the day. Hey, good morning, Heat Trader. Thank you. You as well. Good morning, recessed lights. My God, you must be an electrician. I love recessed lights on a dimmer switch. Thank you. All day long. Guys, I'm going to do a quick review from last night. There was a great trading opportunity from London, and I'm just going to review that before I get started for the day. We had 8:30 news, and let's just review that. This morning we had unemployment claims, and last month we had 213 new unemployment claims opened, forecasted this month for 215, and we came in at under that, 213. So that's good for people, less people unemployed, less people commenced unemployment claims. So good for the people. And I just want to take a look at the 4 hour and just take a look at where we are on the higher time frame. Okay, so I'm just going to run to the 4 hour chart here. Second. So just a quick update. I don't need to change any of my higher time frame levels. Everything stays the same. We are still. Here is the sell side of the curve, market maker sell side right here. And this is the buy side of the curve right here. So we are on the buy side of the curve. These are the highs that were made on the sell side. So we yesterday price came into this 1 hour PD array here. So we worked price through here, and then we've dropped down into this hourly BISI overnight. So we are between this hourly SIBI, and then we've dropped down into this hourly BISI. What we have above us, potentially still unfilled, is this hourly. And so that is from candle one. Let's just see here, we're on the 4 hour. So candle one, candle two, and candle three. So this is an hourly BISI still that has not been balanced. So price could potentially reach for here. And then below us, we still have our weekly support down here. We don't have any imbalances on the 4 hour down here. So I am slightly bullish today. I would say I am bullish today. Today is a high probability no trade day. So for me, this is a tape reading day, and it is not a high probability day because tomorrow is non-farm payroll. So it's a no bueno trade day, but I'm here happy to tape read and just to take a look at the market. So this is on the higher time frame on the 4 hour, and that's kind of where we are. And so price had to move up, and then like I say, we dipped into this 1 hour BISI overnight. So that's where we are. Okay, let's move down to the 1 hour. I'm putting on my chart every day the settlement price from the day before. So here is the settlement price. Just gonna make that a little bigger for everyone to see. So what is the settlement price? The settlement price is the 414 close of yesterday's candle. So here's the 414, and here is opening price. Well, we don't have an opening price for 9:30 yet. So this is ICT strategy. So basically, I mean, I don't trade this strategy, but you could trade this strategy exclusively. So you just mark the 9:30 open, and then you take the settlement price from the 414 candle yesterday, And as per ICT, there's a 70% chance of price coming up to the 50% of the opening range gap, which is between the settlement price and the 9:30 a.m. opening price. So I'm going to put that on my chart just for everybody to see on a daily basis. I find it helpful if people have trouble reading institutional order flow. This is kind of like, I don't know, it's just kind of a nice way to say, okay, there's a 70% chance that price will come up between 9:30 and 10 to the 50% range of this opening range gap. So that's all I'm going to say about that. It's something to watch on the charts. Again, it's an ICT concept. Okay, so that's where we are. We had our 8:30 news, so that's already been delivered. I want to just, somebody asked me in the comment section, how did I know that the high was in yesterday afternoon? So let's just go down to maybe the 15-minute. We'll just quickly take a look at that, and then we'll look at the overnight price. Okay, so of course, nobody knows when the high or the low is going to be in, but here is the yesterday afternoon. And here we have, this is just on the 15-minute candle. This is the 2 o'clock candle, this green candle here, and that was the high of the afternoon. So how did I know, or how did I suspect that price was going to be in? Well, there's a couple of things. The first thing is I expect the high of the afternoon to be in usually anytime after 12 noon. There's a good chance that the high is in. Not always, but there's a good chance. Let's just put a vertical line here. Okay. But what I do use heavily is the 4 hour candle that I have on my chart here. And this is, you can just download this from the indicators. It's a free indicator. So it's TTM, it's the tick magnet, higher time frame candle overlay. And then I have my 4 hour here, but you can have whatever time frame you want, and you can just add as many to your chart as you want. So I have the 4 hour and the 1 hour. So if we look at the 4 hour candle, which opens at 2 p.m., here's our 2 p.m. candle right here. And actually, we need the candle before that, but let's see if it'll show us. 1 second. Let's add 6 candles to this. Okay. And you can add as many candles as you want. So price had climbed during the day so this is the 10 a.m. candle, and here was the high of the 10 a.m. candle. When the 2 o'clock candle opened, if price is going to go lower, we're going to have an open, high, low, close, right? That's how price works. So we can see that this 2 p.m. candle opened up. So it opened here, open, low, no, it was open, high, low, close. So this 2 p.m. candle took the 10 a.m. high, so it purged liquidity. So that was just that's kind of like I used this extensively, the 4 hour candle. And we can see that last night, the 6 p.m. candle opened and it took out the high of both these candles. And then we saw a movement down. So these 4 hour candles, I find them to be incredibly useful. Hi, Frank. So I'm just going to move this back down to 5 candles here. Okay, I want to quickly look at Asia and London overnight. There was a beautiful setup for anyone who was interested in trading in London last night. So let me show you what the setup was. Take this off my chart. Let's move down to the 5-minute. I got to move these cibbies just out of the way for a second so we can clearly see what happened in London and Asia. And then I'll pull them back across for this morning. Okay, so here we have Asia in the blue. And Asia opened and initially moved up, and it swept the PM high from yesterday. Notice that it moved into the hourly candle, the SIBI, that we still have an imbalance in. So yesterday we worked our way through this SIBI, and then price tapped into this higher time frame SIBI and then proceeded to drop. Asia dropped, and here we know that manipulation happens anytime after 2:30 a.m. in London. I like to see manipulation anytime after 2:30 and before around 4 a.m. So price moved down, and we see this candle here made the low, and this was the 115 candle that made the low of Asia. London opened. So London moves down. We have beautiful displacement down. That's what we want to see. London takes the low of Asia at 3:30. This candle here takes the low. Then what are we doing? We're looking for a smart money reversal. Now we can find a smart money reversal on the 5-minute, and I'll show you what that looks like. Here is our inverted fair value gap right here. We have a change in the state of delivery. This is our low. This is our change in the state of delivery right here. Change in the state of delivery. Those are the two main things that I'm looking for. We have a fair value gap, a very small one right here inside the inverted fair value gap right here. So that is our busy. So that's on the 5-minute, and you can see the price moved up. Let's just say we had an entry here again at the 25,000 range, and then it moved up to about 185 points. Excuse me, but look how fast price moved. This 3:30 candle here made the low, and then the candle high was at 410. So price moved up. We can see that the candles were very aggressive. Now, if you move down to, so let me just take that off, and let's move down to like the 1-minute or 2-minute. If you're comfortable trading. So again, let's just find our candles here. Here's our London. So here's our London low. I'm on the 2-minute now. Here's our London low. Again, manipulation happens at 3:30. We take Asia high. Now let's just look for the smart money reversal on the 2-minute. So I'm looking for the inverted fair value gap. So here's our low. Our inverted fair value gap is still the same place. So let's go down to the 1-minute, see if we can get an earlier entry. So we go down to the 1-minute. Here again, here is our candle manipulation that takes out Asia low. And let's look for our inverted fair value gap. Minute. So we have low, high, lower low. And use inverted fair value gap here. This will catch up shortly. That's the inverted fair value gap. We have a change in the state of delivery. So if this is our lowest candle, our change in the state of delivery is here. There are numerous entries here. You could take it off the change in the state of delivery. We can see that price tapped into the inverted fair value gap, but we have to put our stop below to be safe. And you can see that price last night was really, moving around again. It's the day before non-farm payroll, so we can anticipate this kind of retracement, heavy retracement. It's difficult to trade. So anyway, we'd have to have our stop below Asia low, and then eventually price moves, and it's about 185 point move, boom, all the way up, and made its high at 411. So that was a pretty nice trade. That's an A+ setup. Again, it's difficult price movement the day before non-farm payroll. So, and the week of non-farm payroll in general. Okay, so that was the overnight, and let's just go back again and see where we are this morning. So we've already looked at the 1 hour. Here is the SIBI that price worked through yesterday afternoon. And again, this SIBI up here is stems from this drop on February the 26th. So this is still an area of high liquidity that price could draw to. Here's our settlement price right here. So that is the 414 candle from yesterday. So I'm just going to drop this here. We've already had news. I'm just going to drop the GAN box on the settlement price. And 9:30 hasn't opened yet, but we will adjust this. So again, ICT says between 9:30 and 10 a.m., there is a 70% chance that price will move to the 50% opening range gap between the settlement from 4:14 p.m. to 9:30. So we can see that price has dropped below the closing price yesterday. So again, I'm just using this as a tool. I specifically don't trade this. I have traded it, and it's just something interesting to have on the chart as a barometer if you're confused or need some help on institutional order flow. So anyway, something just interesting to watch and keep our eye on. Donald, good morning. German, good morning. Donald, did you trade the London last night? I didn't. I felt that Asia traded not much of a range, so I went back to bed. Yeah, so Donald, non-farm payroll week. It's non-farm payroll week, so it's really brutal price action. I'm not making an effort to get up to trade London because I'm just not anticipating great price action. I will next week, but there was an A plus setup and I just reviewed it. Frank, would you have expected Asia high to be taken for the trade? And do you need SMT for a London trade? So for a smart money reversal, an A plus setup would be with an SMT. That is an A plus setup. The SMT comes after the change in the state of delivery. So you first want to see a change in the state of delivery, and then you're looking for an SMT at the point of the manipulation. Good morning, Sean. Good morning, Sean. So now we don't always get an SMT, um, but an SMT is the A plus setup. Now you just have to decide for yourself what an A plus trade looks like and what a B plus trade looks like and what a B, or a C trade looks like. And then you just have to do your due diligence with back testing and forward testing to determine what you're willing to trade, you know? And so, yeah. But London is like, I really enjoy trading London because to me, London is super straightforward. Like all we're looking for is manipulation below Asia or above Asia, and ideally into a higher time frame PD array. And so we can see that that's exactly what Asia delivered last night, or London delivered. It came right into this higher time frame. This is an hourly BISI, right? So these are the things you're looking for, and then you just have to weigh on a balance of scale whether having an SMT or not is in your trading strategy. Uh, if not, then it's a no bueno. Just wait for the next one where you get an SMT. So, okay, so that's what we're looking at. It's 9:26. Again, today is low probability day. About SMT, you cross YM versus NQ or ES. Either I prefer an SMT with ES, but I'll take a YM as well. Again, it's just something you have to look at and determine what's important to you. So I just want to move down to 2 minutes. Take a look at open. I am expecting higher prices today, but I'm not expecting a lot because this price action is just garbage, really. I'm going to take this off my chart. So let's just go back to again, really low probability day for trading. There are much better days coming next week, so there's no need to settle for low probability. So here's our GAN box, right? And I'm just going to adjust for the 9:30 opening price. All three indices have just taken London low. We are just below this daily level here that we marked from the higher time frame. Guys, my microphone, I'm just waiting for a new cord to be delivered today, so I apologize that the sound is not the greatest, but my microphone will be back in working order later today. So thanks. So here obviously is 50%. I'm just going to try and get opening price here. So all three indices have taken London low. We are in this hourly busy. Let's see if it holds. If it doesn't hold, and again, we have this hourly SIBI up here that has not yet been worked through. We have our AM low, AM1, AM2. And just by looking at the 4-hour candle, we can see that price action is, really awful. Look at the wicks either side. Okay, so 929, let's just get the opening price here. Oh, really? The sound is good? Oh my gosh. I just can't wait to get my microphone back. You know, those cords, they only last so long, right? Morning, Just USA. Yeah, I'm gonna look at the 10 a.m. candle or the 10 a.m. candle as well. Again, I have like very little interest in any trade today, and there's no trading for me tomorrow at all. That's like just a strict rule. There are better days coming next week. Okay, so price just opened. Here's our opening price. 70% chance between 9:30 and 10 of price coming and filling to the 50% of the opening range gap. I'm going to move down just to the 1 minute so I can find the first presented fair value gap. And there we go, just below target. Again, it's a strategy that it's an ICT strategy. It's a tool. And it's just something I find it interesting to watch, to see, in terms of order flow. So we took out London low, all three indices. So there we go. There's the 50%. That's yesterday it did not deliver. Today it did. Yeah. Yeah, exactly. Again, this is a strategy that that any ICT trader could adopt if, if someone's working or something and they have very little time, they just go to the washroom for go to the work washroom and get that first trade in the first 30 minutes, right? So price is inside the week ending of the 6th of February, and now price is 50% of this IPSA range. What do you think? Well, again, I don't think too much on non-farm payroll week because price just does not deliver in a way that is efficient. It might be something to look at for next week, and but it's a really good thought. And yeah, again, you know what? You're really focused on the higher time frame, which is fantastic. So here again, it may fill the entire range here, but like I say, ICT, you can just Google his opening range gap, and again, um, that's the 414 close candle from the day before. And all you do is go down here and and just click on regular trading hours on the 1 minute. You can find the candle. So here's our first presented fair value gap. Guys, for anyone who is paying for that $20 bundle for the bunch of indicators, if you mine sometimes defaults out, but if your first presented fair value gap is not showing on the chart, just open up and go down to the bottom here. For some reason, my first presented fair value gap was unchecked this morning, so I just checked it, and then just go to default and click save as default. And then it'll show on your chart there. I don't know why. Sometimes the indicators, like things bounce in and out. So if you find something disappears, you just open up the indicator and have a look for it. So first presented fair value gap, I am bullish. Looks like we might close this entire gap. Now, if we look at the 6 a.m. candle, you can see that we swept everything overnight. So that also supports the hypothesis of higher prices today because we've swept all of this. You can also look at this red line here. This is indicating to us that price was swept. Just going to bring these back over. These are the SIBIs. The bottom SIBI, the bottom pink one, the pink one here. We chopped around in yesterday, and we were redelivering price. But this one up here, this is potentially a draw on liquidity. Now it is above previous day high. Good morning, Hypnotized 01. Yeah, the name of the indicator. If you go to any of the videos that I post, if you just click on the comment section, I have links. You can just click on the link and it gives you like 3 options. You can pay monthly, yearly, or you get a bundle for 3 months. But I absolutely love having my chart set up with everything on it every time I open my chart. It is just, and not just that, but you can compare it and contrast it against YM and ES, right? You know exactly where you are. Like for instance, we're just above midnight. So I just have to look here. I can see that or the YM is lagging and ES is just under. So it's just, it coordinates all 3 indices and it's reliable, it's effective, it saves time. It has everything that you need. Now, you don't need all this. You can find a lot of these by just going to indicators and individually selecting them. But I absolutely love this indicator. And you know what? After 4 years of trading, it's kind of like for me, because I've been putting these levels on my chart for all these years, but now it's just, I absolutely love it. So we haven't quite taken all of the opening range. I'm going to just move opening range gap up to just show what has yet not been taken, what has not been repriced. So just this little bit here. I'm just going to move this hourly just across a little bit here so I can focus on price. We have a BC here. Again, just looking at the 4-hour candles, the last 5 4-hour candles. I mean, take a look at this price action, guys. This is, it gets low probability and there are better days coming next week. Also, just want to share that I don't give financial advice. I'm an ICT student. I don't encourage anyone to trade. It's a high risk, very risky endeavor, and you're likely to lose money. And this is for entertainment purposes only. Notice that price is just hovering around midnight here. Again, I want to sell way above midnight and I want to buy way below midnight. To me, the fact that we're just hovering around midnight, which is equilibrium to me, there's nothing attractive. I don't see manipulation yet. It's 9:43. Again, I have low to no expectations today because it's one day in advance of non-farm payroll. London being taken at 9:17. Price chomping around above and below the first presented fair value gap. YM expanding down. Like we have a crack in correlation. The indices are not aligned. They're moving in different directions here. So again, that's low probability. We want to see the indices moving in the same direction. We also have SMTs above and below, and that's a no bueno. The higher the SMT, the better. It will push up. We may close this opening range gap. Again, we're inside a macro, the first macro, and a push up, a retrace, a push up, a retrace. NYAM moving down to previous day low. Here's our previous day low for NQ. So indices are moving in different direction. Guys, if you're anxious to click a button, could you click the like, share, and subscribe button? And it goes a long way to help support the channel. I appreciate that. I appreciate you. So before 10 a.m., this gap, opening range gap, has almost been completely filled. Almost, not quite yet. We still have that much left. Like I say, it's interesting to have it on your chart and look at it, because if opening range, if the closing price from the day before is above the opening price, then we can anticipate price moving up at least to the 50% of that opening range gap. If 9:30 opens and it is above settlement from yesterday, then we can potentially anticipate price coming down into that opening range gap before moving back up again. So you just use it as just another, confluence on your chart to help you with understanding institutional order flow and why price is moving where it's moving. So again, we've come up, we've tapped this first fair value gap, pushing up slowly, and YM went right almost to the previous day low. Kind of a rule of thumb for me is, if I cannot determine institutional order flow on the hourly candle, then I really don't want to be on a lower time frame until I can. Okay, so German, you want to see a 4-hour bullish candle as we sweep the previous 4-hour. You want to see a sweep of the previous 4-hour low. Afterwards, you want to see the manipulation into the 15-minute gap, and then long at the 10 a.m. Sounds like a plan. Well, I'm not going to comment on your plan. You know what your plan is. But that 10 a.m. candle is super important, especially on a day like today. See, given that we're in a macro, there's just a lack of volume, a lack of commitment here. It's you can already feel that there's uncertainty here. This is why it's classified as a low probability data trade. So here we are at the 6 a.m. candle. We're waiting for the 10 a.m. candle. So we have open, low. We swept all this high, and then we'll close somewhere in here. We'll wait and we'll look for that little bit of a bump or a jump at the change of the 4-hour, also on the 1-hour candle. But again, I prefer the 4-hour candle because it's a higher time frame. But if you're a scalper, then the 1-hour candle or even the 30-minute would be probably what would be more important to you. But to me, the 4-hour candle just speaks. I love this 4-hour candle. You can almost just trade off of the 4-hour candle. You're looking for the sweeps to happen. I was just saying earlier this morning, for those who weren't here, I'll just put 6 candles on to the 4-hourly for a second. So yesterday, and get rid of that. Yesterday, this was the 10 a.m. candle yesterday. So we had this big move up, and this was the high. You can see here that the 2 p.m. candle opened and it took the high of the 10 a.m. And that's why I went short on the in the afternoon. This is what gave me confluence because we purged the high. So I had I felt there was a high probability that the high was in and that price would begin to drop. And that's exactly what happened, even on a crappy, price action. So when you use these indicators, you can download it. Like you can have as many candles as you want, depending how far back you want to see. You can also add one for the daily. And that way you never even have to move from. So here YM is finally congruent with what's happening. And we have congruency between the 3 indices here. Above midnight. Something to note, just USA chiming in here, 4-hour is bullish in NQ and bearish in both other assets. Okay, very good observation. I don't have the 4-hour on the other ones just because, I mean, you can put them on. But the 6 a.m. we swept everything down here. So it's open, low, high, and then close. So we have 1 minute until the 10 a.m. opens. There's the opening price. Drawn liquidity could be previous day high. It could be to balance price in this hourly SIBI. Again, if we go to the hourly, this is where we are. All right, so this was the sell side of the market. This is the buy side. We're in the buy side. This is the hourly SIBI that price could be pushing to fill. And that takes us to that weekly level that we have on our chart, where we have equal highs across 25,383. So that's where we are on the higher time frame. Of course, when candles open, if we are anticipating higher price, we want to see an open, low, high close. This black line is the opening price. I'm going to now take off this opening range gap. So yesterday, the strategy did not work, and today it did. Just what I notice in price range, and I'm just speaking what I'm looking at is, notice that after this candle, after the 9:30 candle, even on the 1 minute, we don't have any fair value gaps. We have this one just above the first presented. But if we just look at the price action, it's there's a fair value there. These are just on the 1 minute. So we have the previous day high up here for ES, previous day up high for YM. YM is now moving down. And here's our previous day high for NQ. Yeah, I draw my own SIBIs and BISIs. And the indicator does not draw your SIBIs and BISIs. What you can also do is just over here on your 4 hour and 1 hour, you can also draw your BISIs and SIBIs in here on the higher time frame, and that's very helpful. The only thing about the indicator, I don't like the indicators for the BISIs and SIBIs because I want to be the one to determine when that BISI or SIBI is no longer relevant. I also want to be the one that determines the importance, ranking the importance of certain SIBIs and BISIs. And if you use an indicator, well, it's programmed either on or off. So you're either going to get all the SIBIs and BISIs, or you're going to get no SIBIs and BISIs. And then whoever programmed that indicator would have to determine, it's up to them as to when they would turn that SIBI or BISI off. And that may not hold true for your trading style. So that's why I don't like to use indicators for BISIs and SIBIs. There's lots of free ones. I think you can download, oh, excuse me, you can download the whole ICT PD array suite or something that has basically everything. But again, whoever programs that, you need to go into the actual indicator and look at what their rules are. So do PD arrays from previous days stay on your chart? How long do they stay on the chart for? What determines when that PD array is deleted from the chart? Is it, anyway, if you're going to use an indicator, go into the indicator and understand what the rules are by the person who programmed them. But once you, once you force your eye to find the PD arrays, like I don't know, it's like driving a car, right? Looking for cyclists. You're just attuned to it. So we have open, low. How low were we going to go here? Maybe into this fair value gap. Let's see if we get a push up from the 4-hour candle. Yeah, it's important so we might get a push up here. For any indicator, go in and read the rules. Go in and understand how that programmer, what their understanding is and what the rules are. And in some indicators, you can change, you can uncheck certain things or check certain things, right? So you might have like a little bit of, this might be a push up now. You might have a little bit of wiggle room there, but when it comes to sibbies and bissies, and they're such key PD arrays, at least for me, they are, and I think so many traders use it, even if they don't trade ICT, everybody knows what a fair value gap is, right? So anyway, if you're new to it, just go onto the charts and practice finding, finding your sibbies and bissies on the higher time frame. And I always label them, so I always know, is it an hourly? Is it a 1 minute? What is it? And then practice, just go back in your charts and practice putting them in, do some replays and just add the sibbies and bissies and which ones are important. You can also go into T trades and you can search for fair value gaps that are of higher value. And so that's a great resource. I love his YouTube channel for technicals. So we're pushing down. We might come back to this first fair value gap, but you can see that price is lacking intention this morning. I mean, we are in a macro and we are literally going nowhere. Also, this is London high. So we just took London high here. We did not take London high on ES, and we're nowhere near London high on YM. So we're all over the place, which just, again, I know I say it again and again, but there are better trading days coming, and this is garbage. Can you guys throw into the chat just a 1 if you follow Aval, Trader Aval? I added a link to his site, to his YouTube channel. He is such a great trader, and he put out a video yesterday. If you didn't see it, you might want to just check it out. So Aval basically is like this 19-year-old kid. He's just seems like just a really nice kid. And he trades, I think he's got 40 accounts now. And he has a very simple, he trades very similarly to how I trade, but he waits for the 10 a.m. candle to open, and he just goes for base hits every day, $300 to $500. That's all he does across 40 accounts. And anyway, really, really great guy. But he put out this video yesterday, and he talks about trading Asia. He's been trading Asia recently and how he's been making like really, really great trades across Asia. And again, you guys can see that I've been doing the same trades just because um, Asia has been trending recently. So when Asia opens, you can kind of like look at whether we're on the buy side or the sell side of the market, and then just open a small position, and you can take a couple 100 points overnight. And Aval made a video of that yesterday, and that's how he's been trading Asia as well, just because he finds it's been trending a lot as well. So if you're kind of interested in learning more about Asia and London, you can check out his video from yesterday. I'll link it in the description below of this video so that it's easy for you guys to find it. He doesn't go into great detail other than talking about at least identifying institutional order flow. So if we're on the buy side of the market maker model or the sell side, that would influence whether he's going to buy Asia or sell Asia. And then he just holds the position overnight. And some of his trades are like 8,000 overnight. He just takes one mini, but again, it's across 40 accounts. Or maybe he trades 20 accounts. Like I don't know how many accounts he's trading that Asia session, but anyway, he put that video out yesterday, and I thought that was interesting because that's how I've been trading Asia. Now I took a loss last night because Asia, um, I think I took a long, no, I took a short on Asia, but I got stopped out. So that was a no bueno for me. But it can be a little bit hit or miss because it's not like a real technical. It's just you have to look on the 4 hour and just say to yourself, okay, are we on the buy side of the market maker model, or are we on the sell side? So anyway, check them out if you're interested, if that's of interest to you. So here again, we've got this 1 minute BISI here, and we're just chugging through it. We've taken London on NQ. We have not taken London on ES, and then YM is just at a different party today. So again, the indices, we have a cracking correlation. They're not moving in sync. And so this makes not only a low probability day, but even the indices are out of sync. Yeah, Asia is it can be hit or miss, and you do need to have a stop loss that makes sense. So I like to trade Asia with like the smallest position size, and then it works or it doesn't work. That's basically it. I prefer just to wait for London because to me London it's so clear, it's so clean. And once we sweep Asia, especially when London uh, manipulates into a higher time frame PD array, that to me is, there's no guesswork there. So if we move up from here, you can see that price moved through the BISI. Now it's back on top of the BISI. Like I don't want to sound like a broken record here, but I do want to point out that this is terrible price action. It's lazy price action. You don't know if you're going up or down here. $10.14, the first macro is about to end, and even in the first macro, we have not taken out previous day high or previous day low. We are inside previous day high and previous day low, and that is basically That's a nothing burger. Again, we look on the higher time frame. We really haven't, we're still inside of yesterday's price action or Wednesday's price action, Thursday's price action. Today's Thursday. Yesterday's price action. We haven't taken the high, we haven't taken the low. So we're inside the range. It's just low quality. So there's nothing here. Even it's good. It's good to watch these kinds of days because as much as we focus on a good trade, finding a good setup, it's equally important to be able to identify trading conditions that are low probability. German, are you talking about the change in the state of delivery to the downside? This is the high. Again, we kissed the London high, but there's such a cracking correlation with the other indices, but it's something to observe. So if we're looking for the change in the state of delivery to the downside, so we take this high candle here, which is a green up close candle, and then we just put our change in the state of delivery to the downside here. For our candle open high could move down here. If we think about these wicks as gaps, that's what ICT discusses, that a long wick is actually a gap. So 10 a.m. price, the 4-hour candle could come down and explore down here. Change in the state of delivery, inverted fair value gap, fair value gap. 25035. 25035. Tomorrow's a no trading day. Tomorrow is non-farm payroll. So it's a no trading day for me. That is like one crazy day. So, um, so that's a no bueno for me. So I'm just curious, German, you have this idea that you want to see this 25035 hold to remain long. Why this why this level? I'm just curious. Oh, it's the 15-minute fair value gap. Okay. So I don't trade the 15-minute fair value gaps. The only time I would trade the 15-minute fair value gaps is if there were no 1 hour fair value gaps. So I've got there's an hourly right here. So I trade the hourlies. But I totally get it. If your trading plan is the 15-minute, then that would make sense for you for sure. And I support anybody who has a trading plan that's their own personal trading plan and that they have an edge in and that works for them. If you have that, then don't change. Stick with that and become really, really good at that. Tapping into this first presented fair value gap, see if price holds or if price continues to drop. Yeah, I think I reviewed that before you joined, but yeah, that was an A+ setup last night. I'll quickly take a look at that. So price is just dropping here. You could look at this two ways. You could look at this and say, okay, London had a sweep, albeit, the SMT, the divergence between the indices is just too large, too great for me. But you could look at this as the sweep here, price came down, created this inverted fair value gap, change in the state of delivery. You could take a look at this as, I'll enter here and take a short down to here. Or you can take a look at London low was the manipulation. Price moved up and now price is just moving back down here to retap into the 1 hour fair value gap before moving up again. So you could look at it either way and you could potentially take a trade off that either way. Again, I'm not taking a trade because I don't trade this day. Let's quickly go back and take a look at London because it was an A+ setup. So let's first look at it on the 5-minute. And let me move these out of the way so we can clearly see what happened. So on the 5-minute, we see that Asia moved up and then it started to drop and its lowest price was at 115. Here is London. Now, you guys know that my little squares here in gray, they're 90-minute cycles. So when you put them all together, it's London, London, and London. But I have 90-minute, 90-minute, 90-minute time cycles. So here is London. We know that London manipulates sometime between 2:30, never before 2:30. If it manipulates before 2:30, I don't trust it. And I want to see manipulation sometime between 2:30 and 4 a.m. Lately, it's been like 4:15. It's been a little bit later. But anyway, so here, this candle, the 3:30 candle, is the manipulation. So let's look for now the characteristics of a smart money reversal. Let's just look on the 5-minute first, and then we'll do the 1-minute and compare the entries. So we purge liquidity. Yes. I want to have an inverted fair value gap from the previous leg down. Here we go. I want to have a breaker. So we can look at low, high, lower, low, higher, high, right? So low, high, lower, low, higher, high. So price comes down, creates an inverted fair value gap. Price comes back up into this fair value gap. So what is it doing here? Well, it's tricking traders into thinking price is going to go long. So there's a whole bunch of stops here. There are traders thinking that price is going to go long. Price comes into the inverted fair value gap, drops one more time, takes out the sell stops. This is manipulation. This is inducement. Then price begins to move up with authority, with displacement. And what does it do? It takes out all of the stops from the traders right here, takes out the stops here, takes out the stops here. This is inducement. So who would have had their stop here? Well, people who are going short. So the stops here for people thinking that price is going to go long, and people put their stops here, traders thinking that price is going down. So price takes out these stops, sweeps, purges liquidity one more time, and then with displacement moves higher. Now let's put in the change in the state of delivery. So if this is our down close candle here, change in the state of delivery is here. And where would be an entry? Well, on the 5 minute, it's harder to see what your entry might be, but let's now move down to the 1 minute and let's get like a slightly cleaner picture here. Okay, so here's our manipulation. And instead of the inverted fair value gap being up here, we could look at the inverted fair value gap being here. Change in the state of delivery on the 1 minute would be, so this is our down close candle. Here, change in the state of delivery. This is a very small candle, but and then it's clear what the entry would be, the entry, and then I want to look for my fair value gap. So my fair value gap, it's a small one, but it's there right here. There's a fair value gap, or you could wait. It's always good to wait. Here's another fair value gap. It's a SIBI, but let's just call it a fair value gap. Actually, let's put this one in. This is a better one. Fair value gap here. And then your entry, you have a number of entries on the 1 minute. You could enter here. You could wait for this fair value gap, which is above the change in the state of delivery. It's above the inverted fair value gap, so you could enter here. You could even wait for the next one if you want. You do not have to be the first one in the trade. In fact, it's safer to wait. And then after that, it's away for 185 points. This is an A+ setup. The only thing I can't tell from here is if there's an SMT, but it has, it's got your breaker block, it's got your inverted fair value gap, it's got your change in the state of delivery, it's got displacement with force. It has everything in a nice purge from London in the time frame that we're looking for. So this is 3:30, and then I would wait for the macro for 3:45, which takes us to this candle here. And boom, what do we see? Price comes down, hits this inverted fair value gap, and it's away. So let's see what time this entry would be. 3:54. You're still in the macro here. And then, so London comes up, and then we get a, just seeing if we get a smart money reversal here. This doesn't tap into a higher time frame PD array. I mean, I can see a smart money reversal here, but I want to wait for a higher time frame PD array to be swept. So I would not have, like, I would not You can see smart money reversals all over the charts, but it doesn't mean you're going to take everyone. It doesn't mean that it's going to be an A+ setup on everyone. I want to see price tap into a higher time frame, or at least sweep a higher time frame level. But anyway, that's the overnight. And that is just a few examples, whether you're trading on the 5-minute, the 1-minute, whatever you prefer, right? If you can't find that inverted fair value gap on the 5-minute, just go down to then the 3-minute and then the 2-minute. You're looking for the signatures of a smart money reversal. Look at this going down now. Good Lord. Okay. Oh, so just USA. I love these divergences between the assets. Shorted from 25105 at 6 a.m. 4-hour SMT is of high probability. Okay. Yeah. When two assets are weak on 6 a.m. 4-hour and one asset is strong, stronger asset will try to be strong, then capitulate and agree with the other two. Yeah, that's definitely true. USA, again, it's a very low probability day. But yeah, sometimes the assets will try and catch up. And then you can decide which asset you want to trade, right? So that is true. That's definitely a good point. Okay, so let's just go back on the so we had moved up, we had taken the London high, but the other indices had not. But that's a good point by USA that potentially the asset that is far above or below the other two assets may try and catch up. Again, it's 10:32. The manipulation happened at 10 o'clock, so that was inside the macro. You could look at this as an inverted, or sorry, a price coming back up into a mitigation block. You just can't see it on the 1-minute, but you might see it on the 15-second or 30-second. And then the price just sells off. So again, below London low. Let's go back to our indices here. We did not sweep previous day high. We have not come close to previous day low. We have on the Dow, and we have not on ES. So 9:30 open, price moved up on NQ, swept London, came down, potentially a mitigation block up here, but you can't see it. Sold off below London low, might retap into this 1-minute BISI, and then potentially coming down to this level here, this weekly. German low probability day, yes, couldn't engage as never showed a reversal. We swept the 4-hour high. So let's take a look here, go back to the 4-hour. We did sweep the 4-hour high here, but we also have these levels. I don't know. I would have been happier with the previous day high sweep, and even the London was barely a sweep. It was a kiss. It wasn't much of a sweep. There's not much force there. Also, if we look at displacement down, they're little tiny candles. Compare that with London last night with what displacement looked like. You know, you want to see that IPTA has an agenda in mind. These are just like little things that I look at, right? I want to see, I guess I can take that off now. I want to see some force. But let's see if price pulls back into this 1 minute BISI here. There is a trader, I can't remember who it is. If one of you guys remembers who it is, he trades exclusively change in the state of delivery. Like as soon as the change in the state of delivery is in, and I'm sure like he has some other confluences like higher time frame, institutional order flow, but as soon as that change in the state of delivery is in, he enters the trade. If I can think of who it is, or if I can find him, I'll share that with you guys. So the 4 hour open, low, open, high, low, and then close somewhere. I don't know that it's made the low yet. It could come down here. Here is this BISI from the initial move up. So this could be a potential short. This is also the daily level here on our chart from the higher time frame. Okay, let's put on the new week opening gaps. New week opening gap high from March 1st down to March 1st. We could also look at it that this 4 hour candle, it swept all the lows from the mornings from the 6 a.m., 2 a.m., and 2200 hour. This could be, you could look at it as a smart money reversal from here. Let's just change things around and look at it from another point of view. You could look at this as change in the state of delivery is here. This is where the higher time frame bias has to come in, right? You have to know on the higher time frame what it is you're looking for. Change in the state of delivery, like I'm bullish on the higher time frame. This would be more of interest to me, so it's swept everything down here. Let me just take this off for a second so I can see clearly. We've come back into this BISI. This was the push initially up. We've come back through using this as support, changing the state of delivery. Here is our inverted fair value gap right there. I am bullish. It's 10:39. The 10:45 macro has not yet started. We've taken out the previous day low on YM, not on ES, not on NQ. Like we are ranging here, guys. It's a pretty tight range. And again, I'm just calling out that if you can see it from both perspectives, this could be a potential long from here. Finally, we have all three indices looking bullish. Inverted fair value gap, high, low, higher, high. Above this daily. Even on the 1 minute, there's no fair value gap. There's an inverted fair value gap, but there's no fair value gap. There might be on the 30-second or 15-second. Open, low, high, close. It's 10:41. Again, here we are in the higher time frame, right? On the hourly. We haven't really moved out of this hourly civvy, a little bit lower, so could think of this as a sweep. And then if this is the goal, this is where IPTA wants to reprice into. If you believe the price is going to go lower, you could see this as a pullback back into the range right after the initial move down, a retracement back into the range to the first presented fair value gap, and then a continuation to drop. When you can see the move both from a bullish and a bearish one, to me, we're operating in a range. Price is not moving. It hasn't moved above the previous day high. It's only taken out the previous day low with YM. First presented fair value gap, rejecting off that. A move or a possible continuation down. So it's all over. You can look at it from both perspectives. But what has to be the overreigning is the higher time frame. And so this is where the higher time frame, you either believe that we're looking for higher prices today or lower prices. But again, for me, it's a no trade day. So this might be like a good scalp day for some people because they're just working the ranges, right? I prefer to think it's going to go. This is just, look, I'm just sharing my ideas. I am an ICT student, so don't take what I say for anything, but I I am bullish on the higher time frame, and so I would see this as a possibility for price to go higher. And this 4-hour candle has swept all of these lows. So it's 10:45. I'm going to take one buy because This to me is just like a science project at this point. I gotta put my stop loss at the change in the state of delivery. And my take profit would be maybe London high. See how this is a balanced price range here? The high of this wick and the low of this candle. That's a balanced price range. Hi, Levere. Well, London low and London high were taken, Levere, like both sides, right? That's why it's incredibly ambiguous. See if it can get above the first presented fair value gap. Literally the worst conditions to trade in. This is why this is a no trade day. This is painful. It just ruins your psychology. It's slow. It's death by 1,000 paper cuts. Price it's a slog. This is why we don't trade the day before non-farm payroll. Like this is just like, give me a fork. Because I trade with a size that's so small that it doesn't bother me. If you feel emotional about your trade, try halving it. Trade with an amount that you couldn't care less about. For me, I trade with very small size, but I like to read price, so I'm going to take longer runs. So, um, so for me, a loss is like between $50 to $100, but a win would be like a 3 RR or 4 RR, sometimes 10, 12, 13 RRs. Yeah, I know, because I'm bored, Levere. I'm bored. I'm bullish on the higher time frame. We swept liquidity down here. Looking at the 4-hour candle, like look at the 4-hour candle. Okay, the candle opened. It came all the way to, it swept all of this, and I'm bullish on the higher time frame. That is the only reason. And then I'm bored, and I'm trading with 1 micro. So it's like it's a toss. It's a throwaway, right? Maybe I'll take it, maybe I won't. But like I say, I buy below midnight. I want to be as low below midnight as possible, right? I want to sell above midnight. So this meets my criteria down here. I have a smart money reversal. I don't have an SMT. So this is just like, it's a crap. I'm just telling you, it's a crappy day to trade. I'm bored. I'm sitting here. I have 3 things on my side that I'm willing to take a paper cut trade on. If price goes to London, and that's a long way up on a BS day like today, it'll be a miracle. But like I say, this 4-hour candle came down and swept all of this. There's no reason for this candle to come back down here. We've already purged all this liquidity. Of course, price isn't going anywhere, and we're in a macro, so that just tells you everything you need to know. It's called the hope strategy. You hope it goes, nothing more. Well, there is a plan for algorithm, but the day before, it's non-farm payroll week, and it's the day before non-farm payroll. So I think algorithm is just all screwed up today. That's why it's a no trade day. I mean, look at this. We're in a macro. We've gone nowhere. Okay, well, I'm probably going to end this trade because this is going nowhere, and that's pretty much that. Okay, we're out. That's a throwaway for sure. Coming below, change the state of delivery. So this could be just a retracement from this move down. We retraced into here and then a move further down. But I'm out. This is exactly what I don't like trading. There's nothing here that works. So I like days where algorithm is running nicely. You have your you have your model, you look at the market, it makes sense, and you take your trade, and you know what your probability is on the trade. But this is total garbage. So it's a complete waste of time. Yeah, exactly. It's gambling, Levere. Like this is garbage. So I mean, imagine in two macros, like this is what we've achieved. or not achieved. So let's just go take a look at the higher time frame. So again, my framework is I was bullish on the day that this possibly was a draw on for liquidity. This is a key daily level here, this orange level here. This is where price has bounced off of multiple times, and it looks like we're doing the exact same thing. So this is just a no bueno day. On the hourly and the 4 hour, this is the sell side, this is the buy side, and this is just chop fest in here. This is just, there's nothing in here. So it's an hourly, we're inside an hourly busy, it's holding, but there's nothing here. So guys, that's what non-farm payroll week is. I hate it. I hate the first week of the month when I'm making like $100 million a year. I'm going to vacation the first week of every month. I'm not going to trade this. This is just, it's a throwaway week and I just hate it. And so there's no trading for me tomorrow. So I'll be back on Monday. Basically the weekly and the daily levels have been set up this week. I may make a few adjustments to them, but if I do, I'll chat about that on Monday morning. And that's it. So have a great weekend, everyone. Get away from the charts, do something fun for yourself. And I will post Aval's latest video in here in the comment section in case you want to check it out and just catch his comments about Asia. So, okay, guys, have a great weekend and I will see you guys on Monday. Okay, bye for now.